All right. Tonight we're going to do a little something different because I think we can all agree it was a very flat day and there's no reason to go over all of those charts and say the same exact thing over. So today we're just going to look at ES and NQ, and we'll also take a look at the VIX. And I think you're going to see a lot of very important chart developments that are building up, and these are patterns you will want to be paying attention to over the next couple of weeks. So let's crack open these charts and see what's going on in the stock market today. All right, first up, let's take a look at ES, and I do want to point your eyes to the fact that we are breaking out of the bear market resistance trend line, and we are getting consecutive daily closes above that breakout. So even though we did wick above that resistance in the past, we are now closing above that level. So from the zoomed out view, you can very clearly see we're breaking that bear market resistance trend line. So let's zoom in here and we can see that we are starting to develop this very bullish inverse head and shoulders look, which means even if we get up here to the neckline and get rejected and get some type of pullback, as long as we can hold this support down here right around 3,900, there is a very good chance we are going to get this breakout above 40.83 and then eventually start running to higher prices. So if you just look at the bullish inverse head and shoulders pattern building up, whether we get the rejection or blast right through resistance, we are getting a very similar pattern as the bull run just a little bit ago from the October low. So if we repeat that pattern, you could very easily see how we could start to melt up and we could get a bull run that lasts through March. Now, whether or not this plays out is irrelevant because we know to manage our risk at the breakout level around 39.70 and the previous support down here right around 3900. So your risk is well defined whether you're going long or short, because if you're going short, you need to manage your risk around the next resistance higher, which is all the way up here right around 40.80 to 40.83. Remember, we already had the bull breakout from the bear market resistance, so if you were managing a risk around that level, you should have already been stopped out of that position, and then you need to manage your risk at higher resistance levels from here. So the bulls are the ones in control in the short term, whether you like it or not. These are higher lows and higher highs, and we're getting very bullish developments, so you really need to have an open mind following price action and trend for the possibility this support trend line holds up and we continue to march higher. Now, if at any point we slice down through this support trend line, then obviously something else is happening and we can instantly get more bearish, but that is going to require the breakdown below 39.78 and then again down here below 3,900. So we're not going to predict that's going to happen because we're simply following price action, and right now the price action is above the support trend line, above a rising 20 daily moving average, and we're currently seeing higher lows and higher highs as we approach this resistance up here at 40.83. So jumping over to the NQ chart, if we zoom out, you can see the same exact thing is happening in NQ. We are breaking the bear market resistance trend line for 3 days in a row now, and every other time we were above that resistance trend line was just a temporary wick, which was a short-lived false breakout move. So this is looking like the real deal breakout, and on the NQ, you can see that we have a very bullish pattern here, which is going to be this huge double bottom pattern off of this support level down here where we bottomed from October all the way back in December. And if we break this neckline up here at 12,040, we are going to be off to the races, which is likely going to take us all the way up to the 50% retracement of the bear market. So in the NQ, you're getting a lot more bullish while we're above this breakout at 11,677. And if we break the support trend line, then obviously something else is happening and we could come back down to the rising 20 daily moving average. So just have an open mind when you're following price action and trends. You have to pay attention to what the trend currently is. And right now, this is higher lows and higher highs with price action breaking out of bear market resistance trend lines. On the NQ, you can manage your risk around the breakout or down here around the previous daily low at 11,352. But no matter how you look at it, this is going to be a bull trend until price action proves otherwise. So even in the event we get a pullback with this double bottom look, we can also see that we're also getting somewhat of an inverse head and shoulders look. So we're getting very bullish patterns of higher lows and higher highs as we continue to approach bear market resistance levels. So follow price action and stay objective, because moving forward over the next couple of weeks, if you miss this breakout or you're shorting the entire time the market is moving higher, you are going to have a very terrible start to your trading year of 2023. And then finally, we'll close out by just looking at the VIX, because I did tell you the VIX is starting to make a different pattern this year, which is lower lows. And we saw the VIX breaking down below 20 3 times. And every time we break down below 20, we see the VIX is making a slightly lower low, which does tell us fear is leaving the market. And with today's price action, we did have the VIX closing down below 20 yet again. So if you just look at the VIX price action, we're below a negatively sloping 20 daily moving average, and we continue to get closes below 20. So while the VIX is below 20, you automatically need to be a lot more bullish. If the VIX spikes above 20 and gets back over the 20 daily moving average, then you could instantly get a lot more cautious. But right now, just following the price action in the VIX, it does look like fear is leaving the market, which is going to support the bullish breakout in the price action. All right, that's the quick update for tonight. Sorry that it's not the typical update, but it was either this or nothing, and I figured some update was better than nothing. So hopefully you enjoyed this quick update view of the market using the futures market only. And if you're interested in my trade alert service or my Discord server for the stocks channel, you can find out how to join those by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.